Welcome back to another episode of Gimme Some Truth. Today we are talking about the UK, their potential tax changes for business owners, and why this should matter to somebody that is looking at moving to the UK. Keith, this is kind of your topic. Why should people care about this?
No, it is. Yeah. No, I think a big part of this is the UK is starting to realize they made some changes under the newest kind of left-leaning government in terms of changing the rules around remittance-based taxation. On one hand, and we've talked about this in previous podcasts, they made things clearer, I would say, overall. Unfortunately, some of the deadlines that they made have put off rich foreigners who might otherwise move to the UK and invest in property and that sort of thing. And so, there have been a number of knock-on effects. Real estate prices in London have stagnated, we'll say. They're seeing fewer people from outside of Europe and the UK move to London in particular. And so now the current government, is stepping back and looking at these changes and saying, okay, what can we do to maybe soften the blow for these kind of rich foreign investors who might otherwise be coming to the United Kingdom or who are already here.
Yeah, and obviously that's going to have an impact on their tax basis, and it's going to have an impact on even, as you can maybe even extrapolate it out to GDP and things like that, of how the country operates. These are not set yet, correct, in terms of the changes that they're discussing?
Yeah, we're kind of talking about a hypothetical and, an unclear hypothetical. The biggest thing that they're looking at is right now, if you own an LLC in the United States, it's frequently treated as a pass-through entity, right? So you get the hit on your income immediately. In the UK, it's slightly different. If you keep money in a corporation, you're not taxed on it. And then for LLCs, you're taxed when the money leaves the company. Well, with the kind of conflicting rules that they have going on, with the shortening of remittance basis, because what it used to be is you used to have, several years before you had to, and it depended on how long and so on, but it was 7 years closer. Now they've shortened it to 4 years, which means, say you're a partner in a law firm. Well, you're getting pass-through income from your LLC, and the chance of double taxation is increased rapidly because of the different rules between how corporations can pay out in the United States and how they can pay out in the UK.
And they're seeing a real effect on people wanting to maybe live out the rest of their life in the UK that are either here or in Asia or wherever they might be. This is having a direct effect on whether they make the decision to go there versus, say, maybe Spain or somewhere else.
Yeah, and I think in concert as well with kind of Brexit, firms are looking at now, does it make sense to have an office in London, or does it make more sense to move people to Ireland, Dublin, because that's in the EU? Then, we have the European basis, but our employees aren't being taxed at that higher rate. And also it affects these companies themselves, because frequently when you have these double taxation, people will negotiate in to their contracts, okay, I'll move to the UK, but I can't get a hit on my salary, right? So I'm making $200,000 in the US after tax. If I move to the UK, it's got to be the equivalent of $200,000 after tax, which if you have a higher tax burden, all of a sudden, costs the company more to make that, equivalent. So it's along with, and I think we'll talk about it, there's been some changes in the visa that they're proposing to kind of bring people back a little bit more.
Yeah, and we've covered this territory that I'm about to cover before, but I just don't think it can be covered enough. So can you speak a little bit about why it's so important for people that are looking at moving to a different country, whether it be US to the UK, whether it again be Canada, the UK, wherever it might be, why it's so important to have a good understanding and good professionals in place by way of taxation and legal before you even kind of make that decision, right? I mean,
Yeah.
you really have to understand what the impact of this is.
Well, I think what's particularly interesting about this particular proposed change in UK law is the fact that it targets LLCs, US LLCs in particular. And US LLCs, I mean, even by US standards, are kind of strange. They're kind of a hybrid type of entity, and they don't always translate very well to a cross-border situation. And so these questions that we see now that relate to kind of UK-US cross-border taxation and some of the stuff that Keith mentioned in terms of timing, whether you hold assets in the LLC, when do you pay income tax, they're relevant in the UK, but they apply to a number of countries around Europe and around the world. Just because you have an LLC and you have, or any sort of corporate structure, and you understand the way that it's taxed in the US and the sequence of taxation and the timing and all of that and what you can deduct, you can't just assume that that's going to translate into your local tax law in the country where you're going to reside. And so bringing more transparency is, I would say, is welcome. It's very important to a lot of listeners and clients who are business owners or people who are partners in law firms and things of that nature. So I think it applies to a lot of people. And I think it makes sense that more countries would try to clarify these laws because they remain very, very complex. And so you absolutely need, especially if you have any sort of structure as part of your wealth, you absolutely need to get the right type of advice. You can't just assume that it's going to work in the same way that it does in the U.S.
And we've seen plenty of examples of where people have made those assumptions and then gotten themselves into some really difficult spots that they potentially could have avoided if they would have checked into it a little sooner.
Right. I mean, in most places around the world, if you have an entity, it's assumed to be legally and for tax purposes separate from you. It's assumed to be its own entity. You can't just assume that it would work as kind of an extension of your own personal self-employment or professional income. This is kind of a pretty unique interpretation that we have here in the U.S., but doesn't necessarily travel very well.
Yeah, that protection that entity gives you based on U.S. law and tax law specifically very well might not travel to other countries, and so therefore you might get benefit here, but you might actually get hit even harder.
Oh yeah,
somewhere else.
And I think just you made the point that it's all entities. So this also includes like trusts. I think our colleague Stan is fond of saying trusts don't travel. Right. And so if you have any entity, not just an LLC, but a trust, all of a sudden you could be running afoul of local jurisdiction. And it's shocking how many people think, they can just show up in another country and everything is going to work exactly the same way.
And not only that, but potentially even maybe even slightly more informed, but still not where they should be. The assumption that they can go to another country and I'll just go to the local corner, CPA office and get the advice that I need. That's not the case in many ways. The professionals that we know are very, very good at this, but it's not as though there's just dozens and dozens and dozens of these professionals. It's hard to find people that really understand U.S. law in this example and UK law and how they work in concert with one another.
Yeah, I think especially if you start looking at the Venn diagram of people who know UK and US tax for individuals, it's, shrinks. And then you add in, do you know business law for US and UK? That's 4 overlapping circles. And in the middle, it starts getting much, much smaller. And I think, if you look just with the US and UK over the last number of years, in 2018-19 as part of the big tax changes that the first Trump administration passed with Congress, there was a lot of repatriating foreign profits to the United States. Well, that had an effect on small business owners. And if you're not keeping up to date on the US side and you're just worried on the UK side, similarly, if you're just worried about the US side, you won't realize what's going on in the UK on the UK side with these things. So, more than anything, this is, a hypothetical right now. We don't know the details of what's going into effect, but it shows, I think, is a good example of that you need professionals who know both sides of the equation. And in this case, with business and individual, both sides have both sides.
Right. Right. Yeah, absolutely. You touched earlier on golden visas. Let's wrap up on that. Can you just speak a little bit in terms of the golden visa program in the UK and kind of how it's changed in the last, say, 4 or 5 years?
Yeah, there were some, exemptions for people who, purchase property and put money into the UK. And then there was also the ability to pay kind of a flat tax and avoid having to pay tax on your worldwide income that a lot of people took advantage of. What the newest kind of option that is under consideration, and again, we haven't seen definitive legislation, is just a kind of golden visa program where investors who brought $5 million into the country, maybe put it into a company or bought a company or bought property, still not clear on those details. They would have the ability then to get a 3-year visa and probably renew it, go from there. And, we're seeing around the world, number of countries. Just forwarded an article from the Financial Times this morning about how New Zealand has a golden visa program. Poland is now investigating. Italy, Portugal had the most celebrated one. They've really restricted that one. Even Spain has a little bit of a golden visa. So this has become a big, I think, as the world gets more mobile and so on, becomes a big changing thing for, people looking to help investment in their country and attract population, because, you have to have population growth the way the current system is structured.
Yeah, and we're always advocates of, when time is at your disposal, when you have time as a luxury, use it to educate yourself, to really understand your situation. Essentially, the reason why we're doing this podcast today, is this definitive? No, it's not. But there's so much in international law that isn't definitive, but we still need to know about it, and we still need to know what direction it's potentially going to go and how it could affect people. Something like this could have an immense effect on somebody's decision of whether they're going to make that change, or whether maybe they're going to pause for 6 months, see how it plays out, and then make the change. And to that end, we're also committed to trying to get as many other professionals within the international world by way of accountants and attorneys on this podcast. We're going to continue to try to do that, to try to either give more information in a specific country or more information just in general from people that really have a good handle on it. So I think we'll leave it there today, but obviously we'll be back with more information as this develops between now and hopefully the end of the year.
Do we have breaking news at some point? Will you be?
Well, we might. See, I'm going to tease it because, one of you two might get on with a breaking news banner if this happens. And as we like to say, tongue in cheek, nothing happens that fast in Europe. So maybe breaking is maybe it's just news.
We're recording this in August, so nothing is going to happen until at least late September.
August, it doesn't even matter anyway, right? Yes. It'll be news, not breaking news when it happens. So we'll be back in touch when that happens. But until then, thanks so much for tuning into another episode of Gimme Some Truth.
Walkner Condon Financial Advisors is a registered investment advisor with the SEC. Registration with the SEC does not imply a certain level of skill or training. The opinions expressed by the participants of this podcast are their own and do not reflect the opinions of Walkner Condon Financial Advisors. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance. Thanks for listening, and for further information, please visit WalknerCondon.com.